Good evening, students. Welcome to the live coaching classes organized by Board of Studies, ICAI. Today's evening, we are going to have a discussion on the next topic called import and export under GST law. So as per the protocol, please let me know I'm audible. My presentation is visible. Once I have a confirmation from you, we will go ahead with our discussion. You can put it in the question window for me to get a confirmation. Based on your confirmation, we shall go ahead. Yes, Ramakrishnan. Good evening. Let me have a confirmation from you with respect to the presentation and the audio. Then we will go ahead with our discussion. There's a little time gap between your confirmation and then I receive it my end. And for your information, today's presentation along with the Excel file which we use for our discussions in the earlier classes has been hosted on the website. So students who have not downloaded this presentation, along with the presentation material, I have made available this Excel file which we discuss on our regular basis. So I request all of you to have a download of that particular material. Now, I got a couple of confirmations. Thanks Rohit, Ramakrishna and others for giving a confirmation. Now, last class, we had a discussion on payment of taxes. We had our discussion half the day discussed and we have left from there. So what I will do, let me complete my topic on TDS and TCS, and then we'll come back to today's topic called import and export under GST law. So let me just share this topic. Okay, just give me a minute. Okay, just give me a minute. Yes. So in the last session, we have stopped our discussion with this so-called topic called TDS, tax deducted source under GST law. We will take 10 to 15 minutes in today's discussion, and we will have an understanding on this concept called TDS and TCS, tax deducted source, tax collected source. Quite famous topic for people who have been doing their internship, where you are expected to do watching of the purchase transactions for the purpose of verification of TDS and TCS. Something like that, even under GST law, the government has thought of having a provision called TDS and TCS. I'll just give you a backdrop, the concept of TDS and how it is used for the government authorities for the revenue augmentation. As you are aware, under income tax, it so happens that once in a year, when the assessee was filing their income tax return, government was getting revenue. To have augmentation of revenue, to have revenue inflows little earlier, they brought in this concept called advance tax. So what happened in case of corporates, once in a quarter, we need to pay advance tax. So earlier, only when the IT return was filed, government was getting revenue. Later, they have brought, after this advancement of advance tax, once in 3 quarters or once in 4 quarters, the money was getting put to the government. Later, they felt a little more thoughtful and they say, why don't we think of an option where every month money starts flowing in, and also let us make accountability of the taxpayer where the transactions get routed through the well-organized setup to get the taxes. That's how this concept of TDS under income tax was brought in. So they have given a list of services. Those list of services, if received by so-and-so set of people, then there is a concept of TDS to be deducted and make a remittance to government. So far, so good. The same analogy was brought into the indirect taxes where the government felt, look, there could be transactions where the assessee was collecting tax, assessee was not paying tax to the government, or assessee could be raising an invoice, but it gets unnoticed when the civil work or another so-called unorganized sector is there. So the same analogy of income tax law was brought into GST law. But the difference over here is they have thought of a particular niche market where these taxes are not being properly paid. That's how they have identified 4 people as of now. On your screen, you can see first element is by central government, state government, or departments or establishments of central or state governments, notified under 51 subsection 1 clause A. Next is your local authority, notified under section 51 subsection 1 clause B. Government agencies, notified under 51C. Other persons notified by the government in due course of time. So they have identified 4 people: government departments, local authority, government agencies, and certain class of notified persons. Now, these 4 set of people were identified for the purpose of this TDS. Now, government department or government establishment. Example, you have your Ministry of Corporate Affairs, Reserve Bank of India. No, these are all the departmental establishments. Next to you is your local authority. Like you have your local panchayat or your municipality or your water sewage board, the electricity board. These are all your local authorities who administer on behalf of the central government or state government. Next is your governmental agencies. If you happen to see, the distribution of food to the underprivileged happens through some notified government agencies, like Anganwadi agency. Now, Anganwadi is one of the agency where the distribution of nutritious food, distribution of medicines to the end set of people happens to this particular agency. Then on the other last link, we have notified persons. As of now, to take an example, the nationalized banks have been notified under this particular section 51 for the purpose of compliance with section 51. So what this provision say? The provision says that deduction of tax at the rate of 1%. 1% under CGST law, 1% under SGST law. So 1 plus 1, 2% under state. Or if it is an interstate supply, 2% straight away. So deduction of rate at the TDS at the rate of 1% from the payments made or credited to the supplier. Like income tax, either I do the booking of bill or I give a credit to the vendor. Hereinafter referred to as deductee. So there is a deductor. Now these 4 agencies, we have to call them as deductor. And the person to whom they make the payment is called as deductee. The TDS has to be deducted on what? On taxable goods or services or both. Please understand. This concept of TDS was brought in to apply for deduction of TDS at the rate of 2% on taxable goods or services supplied by the supplier. So if the goods are supplied are not taxable, no need to deduct any TDS. The catch point we need to understand is if the goods are taxable in the hands of supplier, TDS comes into picture. If the goods are not taxable in the hands of supplier, no TDS has to come into picture. Where total value of such supply under a contract exceeds 2,50,000 rupees. Examination. Expect one question for testing of the concept of TDS for 2 marks to 4 marks. They'll give you a couple of examples. Based on that, they will ask you to examine applicability of TDS. So for me to see whether the TDS is applicable, a contract value should be exceeding 2,50,000 rupees. It is 2% in case of an interstate supply. Now, students, just to keep have an understanding, there are 4 people who have been identified: the central government, state government, or the establishments under the respective state or central government, The local authority, when I say local authority, it is your, say, local panchayat or your electricity department, water department. Local agencies like Anganwadi agencies, then the notified persons. Example for the 51B is your banks. All the nationalized banks have been notified for the purpose of TDS. So in case if there is a supply which is taxable in the hands of the supplier, then the rate of 2% has to be applied on account of section 51. Now, this value, contract value, when we have said, which exceeds 2,50,000, this contract value has to exclude the taxes. The contract value has to exclude taxes. So if someone is making a supply of goods or services whose value is say 2.75 lakh, and out of that the taxes itself is around say 30,000. So from 2.75, if I remove 30,000, it will fall less than 2,50,000. This is how we need to make a computation. Then TDS at the rate of 2% has to be deducted. Now let me come to Excel to make you understand with an example. Students, I recommend please make a note of this and you can give an answer one by one. Government notified authority, say Rajasthan Electricity Board. Rajasthan Electricity Board. Now, has it been notified? Answer, notified under section 51 for TDS. Now, let us take few transactions to see whether TDS is applicable. If TDS is applicable, how we have to tackle with that. I'll give you serial number, transaction, first point, supply of goods, fresh milk by I'll say farmer cooperative society for rupees 2,75,000. Second point, supply of stationery worth rupees 2,62,500, GST included 12,500. Third, supply of rice for canteen purpose rupees 3,85,000. Now, let me name the supplier. Say supplier also let us take into consideration. Milk is supplied by Farmers Cooperative Society. Say second case, stationery is supplied by Mrs. XYZ and Co. Third example, supply of rice, Mr. A, individual. Now, examination, you will be asked a question to examine applicability of TDS provisions, and if applicable, compute the TDS and confirm what is the amount of TDS to be deducted. So these are the three transactions let us take into consideration. Point number one, there is a supply of goods, that is fresh milk by farmers, which is supplied by an entity called Farmers Cooperative Society. The value of supply is 2,75,000. Will TDS be applicable? Yes or no? If you say yes, what is the reason? So point number one, what would be the value of TDS? If TDS is applicable, you can say yes, and you can mention what is the rate of TDS. If TDS is not applicable, you can mention no, TDS is not applicable. You can mark your reason why TDS is not applicable. By the way, TDS is a separate registration under GST law. I could see that there are a couple of questions posted by Namita and yeah, there are a couple of questions. Namita, I'll take another, maybe I'll finish my TCS provisions, Namita. I'll come back to your questions one by one. I have received an answer from Akshay. Akshay says that milk is not a taxable supply, hence no TDS. Perfectly correct, Akshay. So students, for point number one, my answer would be, for point number one, answer would be milk is not a taxable supply, hence no TDS. So the amount which is payable to this Farmers Cooperative Society for 2,75,000, Rajasthan Electricity Board, though they have been notified under Section 51, though they have got a registration for the purpose of TDS, on the value of supply, that is milk which is received from this cooperative society, no TDS is applicable. Answer is no TDS applicable. Akshay, your answer is right now. Now let us move on to question number 2. For question number 2, supply of stationery worth 2,62,500. GST is included for rupees 12,500. So please let me know whether TDS is applicable. If TDS is applicable, let me know how much is the TDS amount. For point number 2. For point number 2. Namita has an answer. The value of supply of stationery is not exceeding 2,50,000. No TDS. Okay. Akshay has got an answer. Akshay says that TDS on stationery is not applicable as the total value is not more than 2,50,000. Perfectly correct. Perfectly correct. So both Akshay and Namita, your points are valid, ma. So for second case, we have to take into mind TDS is applicable only when the contract value exceeds rupees 2.5 lakh. Now, in this case, my supply value including GST, is 2,62,500. In that GST component, if I remove net taxable value is 2,50,000. Now, since 2,50,000, my section 51 says that TDS is applicable only if the supply value is exceeding rupees 2,50,000. Now, in this given case, since the value is not exceeding 2,50,000, no need to deduct TDS. Absolutely right. Akshay and Namita, your answers are valid. Third scenario, supply of rice for canteen purpose, rupees 3,85,000. Now, what would be your answer? Namita has an answer. Supply of rice, exempt supply. So what? Is TDS applicable, Namita? Sarvanan has an answer. So no TDS is applicable. Okay, for point number 2, yes, Naveen. Yes, Sarvanan, you are also right now. Akshay has a point. Akshay says that if rice is processed, then TDS is applicable. Akshay has a point. If the value of supplied rice is a processed or branded rice, then TDS is applicable. Okay. Let us look at that point, Akshay. Let me also have the others' view. Naveen, Namita, Ramakrishnan, Rohit. Let me have your views also, ma. Akshay says that if it is a processed rice, TDS is applicable. Let me have others' views. Durga Rao, Namita, Naveen. No TDS on supply of rice. Okay. Namita says no TDS is applicable on supply of rice. Okay. Now, here, coming back to the question, supply of rice exempted or taxable. In addition to that, is the supplier registered under GST or not? Now, for a moment, if we assume that Mr. A is not registered under GST due to threshold turnover, and rice supply is taxable. Now, please understand, supplier of goods, like the goods which are supplied by the supplier are not taxed for the reason he is not registered under GST law. Now, the buyer, the recipient, would not be in a position to know whether the goods are taxable in the hands of supplier, yes or no. Now, if you read the provisions of TDS, they say on the value of goods supplied taxable, where the contract value is exceeding 2,50,000. There could be a scenario where Mr. A, though he is supplying the goods which are taxable, he has been excluded from registration for the purpose of compliance because his turnover does not exceed 2.5 lakh. This becomes a contradictory view. Now, what happens here? This supplier, my supplier happens to be Rajasthan Electricity Board, and sorry, not supplier, they are the recipient. And supplier happens to be Mr. A. Now, when Mr. A has not registered under GST and Rajasthan Electricity Board deducts something called TDS, it goes and sits in the GST number of the supplier. The question comes here is, sir, my supplier is not registered. I don't have a GST number. How do I comply with the law? The answer would be here is, if the supplier has registered under GST law and charged GST, where there is a value of goods supplied is taxable under GST in the hands of the supplier, then the recipient will be deducting TDS 1% CGST, 1% SGST. Now, in this case, the status of Mr. A is not provided and the status of the goods supply is also not provided. So what we can say, examination, if the same question has been tested, we can say that status of goods supply, that is rice, taxable or exempt, is not provided. Also, registration status of Mr. A is not known. It is assumed that rice supply is exempted in the hands of Mr. A. It is assumed that rice supply is exempted in the hands of Mr. A. Accordingly, no TDS is required by the recipient. This would be the conclusion which you can put forth in your examination when you are presenting your answer. Am I clear? Am I clear? Yes, Ramakrishna. Only packaging rice is taxable. Now, the question is not clear whether the rice is taxable or exempted. Since in lack of clarity, you have to make it clear and then you have to make a conclusion whether TDS is applicable or not. Saho, whatever questions you are putting in your chat window, the same thing is good enough for you to put the questions, Saho. There is no separate chat window. Questions, wherever you are being provided with posting questions, the same window you can update so that we can view your questions and give an answer for that. Geeta Kalidas says that unpacked rice, no TDS. Namita says in stationary calculation, 1,25,000 to be deducted instead of 12,500. Oh. $12,500. Okay. 2,62,500. From that, TDS of 12,500. Hope this is clear, Namita. There is a typographical error. From 2,65,000, 12,500 is the GST which is charged. 1,25,000 cannot be the GST because it's almost 48% of the taxable value. So this is the answer for the second case. Students, are we clear so far? TDS provisions. 4 entities have been notified. When the contract value is exceeding 2,50,000, when I say contract value is exceeding 2,50,000, GST has to be set aside. CGST, SGST, IGST, cess, or Union Territory tax. Any of the taxes, if it is included, those have to be set aside. This is a point which you need to take into consideration. Next, if the contract value is exceeding 2,50,000, then TDS comes into picture. Now, let's come back to our discussion on TDS. Namita, I have made it corrected, ma. Hope that is clear as of now. Okay. Now, this value of TDS, if any of these 4 authorities have, when I say TDS, section 51, government agencies, then government undertaking, your government agencies, then your other departments, notified people. Between these 4 people, any services are rendered one to other. Then no need to deduct TDS among these 4 authorities. Now, for the purpose of TDS, my regular registration is different. My TDS registration number is different. For an example, State Bank of India has been notified for the purpose of TDS. What happens? Every State Bank of India will have a separate GST number. TDS, there will be a separate GST number. Reason, my existing GST number cannot be used for the purpose of TDS. For the compliances for TDS, I need to have a separate GST number. Another example, Rajasthan Electricity Board. Rajasthan Electricity Board does not have a PAN. On the basis of a unique identification number, they will be allotted with a TDS number. So the Rajasthan Electricity Board, when they deduct TDS, there is a separate form which they need to file. GST 3B is not the form. They just deduct that money and they deposit it to the government account. So what if there is a transaction where the service provider is in one state, the place of supply is in that state, the recipient is in another state. Now, this is a complicated provision which was explained under TDS. We have this chart to understand. So what if there is a location of supplier, the supplier is in state A, place of supply is in state A, the recipient is also in state A. Now, for a simple example, Tamil Nadu, let us take. Tamil Nadu Electricity Board has received services from Praveen, who has registered in the state of Tamil Nadu. Supplier, Tamil Nadu. Place of supply, Tamil Nadu. Tamil Nadu Electricity Board, again, is also in Tamil Nadu. Since all of them are in the same state, TDS is applicable. Answer is yes. Example number 2. My supplier is in state A, say Tamil Nadu. My place of supply happens to be state A, that is Tamil Nadu, but the recipient is in state B. Example, from Bihar, say let's take an example, Bihar Nagar Palike Samsthan. Bihar Nagar Palike. Now that is a local authority for the purpose of development of a particular district. Bihar Nagar Palike, they have one of their director have visited all the way to Tamil Nadu for a particular conference. That particular director stayed in the state of Tamil Nadu. In example number 2, Bihar Nagar Mahanagara Palike, your state authority, one of the director of the Bihar authority has visited for a conference to the state of Tamil Nadu. He stayed in the state in a hotel for say 5 days. Now, Tamil Nadu person says, I am a service provider in the state of Tamil Nadu. For the purpose of immobile property, Since the person resided, took a accommodation in the state of Tamil Nadu, the place of supply happens to be Tamil Nadu. So when you look at the bill, service provider is in Tamil Nadu, place of supply is in Tamil Nadu, intra-state supply, they charge SGST, CGST of Tamil Nadu. When the bill goes back to Bihar, the authority concerned, they don't have a right to recover TDS. Reason, TDS, 1% I can recover and I can deposit only within the state of Bihar. Since this bill has been out of Bihar, they don't have a mechanism to withhold the TDS and transfer that 2% to the state of Tamil Nadu. So in that scenario, my TDS applicability is no. This is my non-applicability of TDS. Example number 3. My location of supplier is in state A. Place of supply happens to be in state B. My recipient is also in state B. Let's take an example. I'm a trainer. I am registered in the state of Maharashtra. I have received a contract from the government, like say the panchayat or the village of say Haryana government. Haryana government invited me to give a session on applicability of GST. Now here, training services. I go all the way to Haryana. I do a training service over there. I'll come back. My place of supply happens to be the Haryana. Recipient is Haryana. Now when I raise a bill. Service provider is from Madhya Pradesh. Service is rented in Haryana. IGST, interstate supply. Because this is the place of Haryana, this particular Haryana authorities, they can deduct the TDS of 2%. So the answer is yes, TDS is applicable. So examination, this is another question for 2 marks, which you can expect where my service provider or supplier, my supplier of goods or services is in a particular state, both of them are in a particular state, which is not as of the recipient, then no TDS is applicable. For brevity, I'll give the same example once again in my Excel file for you to understand. Service, I'll say supplier, recipient, and place of supply. Example. Now, supplier happens to be ABC Hotels. Recipient happens to be, say, let's take example of say Karnataka. I'll take the example of Karnataka. Say Bluet Bengaluru Mahanagara Palike. Now, in short, BBMP. This is the name of the service provider. Now, this particular BBMP has gone, one of the director has gone for, okay, ABC Hotels, they have their office in, say, Maharashtra or Delhi. Let's take example of Delhi. Place of supply happens to be hotel in Delhi. Now, this service is for accommodation. Now, BBMP is an authority notified in Karnataka. Now, in this particular example, one of the director from Karnataka travels to Delhi for a particular meeting. He stays in a hotel which is there in Delhi for a particular period of time, and he comes back with a bill. So when the hotel fellow charges the GST, service provider happens to be in Delhi, the place of supply happens to be Delhi. Why? Section 12, subsection 3, Section 12, subsection 3 of IGST Act refers to place of supply as Delhi, Union Territory for immovable property. Now, because I get a bill which shows Union Territory tax of Delhi, CGST of Delhi, and that particular tax cannot be withheld by Karnataka notified authority, there will be no TDS. Since place of supply and supplier are in a state or union territory other than that of the recipient, no TDS has to be deducted. Now, this is a provision tested in case of your TDS. Are we clear? You have any doubts so far on TDS provisions? Akshay says supplier should be registered for the purpose of TDS. Answer is yes, Akshay. Unless the TDS registration is there, the recovery of the 2% and deposit for the purpose of making a return will not happen, Akshay. Answer yes. I need to have a separate registration for the purpose of TDS. Namita asked, sir, how registration of Mr. A is going to affect the taxability? Now, the goods are not taxable. From A's perspective, Namita, goods are not taxable because he's not registered under GST law. He has been exempted for the purpose of GST registration based on the threshold limit. So since this gentleman is not registered, there will not be any TDS done by the authorities concerned per se. Moving further, Durga Rao says TDS under section 51 is applicable only if the supplier is registered person. If his, how supplier will get TDS credit in GST 70? Yeah. Durga Rao, in this particular example, which we were talking about Rajasthan Electricity Board, Rajasthan Electricity Board deducts TDS. It is not credit to be enjoyed by Rajasthan government. Assuming for a minute I am a supplier, I supplied stationery worth 5 lakhs. If I am a supplier, I am registered under GST. The TDS which was deducted by the Rajasthan Electricity Board will come and get credited to my GST account. How and where? In the next slide, I'll explain that. Moving further, students. This provision of TDS. Yes. So this particular entire graph, you need to understand location of supply and the place of supply. If it is in another state, no need to deduct TDS. The provision says that the person who is deducting TDS, every month, he should deposit that particular amount by end of 10th day of the subsidy month with to the government offices. If there is a delay in deposit, then there is a late fee applicable, 100 rupees per day up to a maximum of rupees 5,000. Now, this particular TDS which has been deducted, a certificate will be issued by this particular person in form 7A. And this particular TDS which has been deducted will come and sit in the electronic cash ledger of the supplier. I repeat, whoever is the supplier, for that supplier, the amount comes and sits in the electronic cash ledger. How is that? I need to just log into form called TDS, TDS deductions, TCS deductions. Once I log into my GST window, there's a window where it says TDS credits received, TCS credits received. I just need to log into that window saying that TDS credits received. Like your income tax, there will be a deduction of TDS with TAN wise. Like you have a TAN number against which the TDS deducted. Similarly, you have your TDS number against which what is the GST they have withheld. I need to say, yes, this is a supply I have made. I have to reject, no, this is not a supply I have made. So I have a choice as a buyer. I have to log in. So as a supplier, I have to log in and I have to accept. Once I accept, that comes and sits in my electronic cash ledger. And my supplier, he will file a form called, the recipient who is deducting TDS, he will file a form called GSTR 7. This is what we need to understand with respect to TDS. Now, before we move on to TCS, let me see if there are any questions so far. So far, so good. Next is the concept of TCS. For TCS, we need to understand these two definitions. Then we have the entire concept of TCS clear. This TCS says e-commerce under section 2 clause 44, electronic commerce means supply of goods and services of both, including digital products over a digital or electronic network. That's called e-commerce. And there is a definition for e-commerce operator, means a person who owns, operates, or manages what digital or electronic facility, digital or electronic facility for e-commerce. So there is an e-commerce, that is a platform where the trade happens. And this platform, which is managed by a person who will be called as an e-commerce operator. E-commerce operator. Now, to understand further, this section 52 says that TCS refers to the tax which is collected by the e-commerce operator when a supplier supplies taxable goods. A supplier who is supplying taxable goods and services through its portal, and payment of that supply is collected by the e-commerce operator. Now, I'll give you an example to make you understand. Most of you would have placed an order on this e-commerce operator, maybe Flipkart or Amazon. Now, in case of a Flipkart or Amazon, it so happens that there is a seller who wants to get his products listed on Amazon portal. There's a buyer who gets connected to the port. He'll not connect with the seller. He just logs on to his account. He'll see the list of products and he makes the payment for those particular products. The money which was paid on Amazon gets directly credited to the Amazon account. It does not go to the vendor's account directly. Please understand. In an e-commerce platform, where a facilitation of trade is happening, there is a seller, there is a buyer. When the buyer makes the payment, this money goes and sits in e-commerce, but nothing is received by the seller directly. The money from e-commerce, that is Amazon or Flipkart, gets transferred to this seller over a period of time. Now, this is a business, how it happens. Now, what does this section 52 say? Look, whenever there is a platform called e-commerce, and every supplier who supplies taxable goods or services, the moment I say taxable goods, the goods which are taxed in the hands of supplier. Please understand, Namita. Only if the goods are taxed in the hands of supplier, TCS comes into picture. So what if goods are not taxed in the hands of supplier? No TCS. The same fund is applicable for TDS. The supplier who is supplying the goods, the supplier who is supplying services. If the goods are taxed in the hands of the supplier, then TDS or TCS comes into picture. If the goods and services supplied are not taxed, no TCS comes into picture. So here they say every e-commerce operator, not being an agent who has been mandated to collect TCS on the net value of taxable supplies. When I say net value of taxable supply, sales minus returns, if any, made through it by the suppliers, where e-commerce collects the consideration on behalf of the supplier, shall deduct 0.5% in case of an intrastate CGST, 0.5% SGST, or if it is an interstate supply, 1%. So please keep in mind, in case of TDS, 1% SGST, 1% CGST. In case of a TCS, 0.5% CGST, 0.5% SGST. Or interstate supply, 1% of the net value of supplies. So these are the basic fundamentals we need to keep in mind. Now, the same way of TDS, every TCS which has been deducted, within 10 days, it needs to be deposited to the respective seller's account through a form which has been notified. And this particular amount which was not deposited, again, there is a late fee which gets attracted up to a maximum of 5,000. Now, these are the basic concepts of TDS and TCS, which we need to understand from the payment of taxes chapter. Now, from here, students will move on to the current day's topic called your, what I can say, import and export under GST law. Imports and exports under GST law. Now, before we start with today's topic, there are a couple of questions which have been posted by Namita. I'll take those questions and then we will start afresh with our today's topic. So why Haryana authorities deduct TDS on training service by you? See, it is an interstate supply, Namita. When I have charged IGST of Haryana. Now, sitting in Haryana authorities have a right to deduct TDS. In the example of Union Territory, Delhi, Karnataka authority cannot deduct the TDS Union Territory tax of Delhi. But in case of Haryana, I being a chartered accountant, from my place, that is from Bengaluru, when I render services, definitely I can Now, when I charge IGST, the Haryana authorities have a right to deduct TDS of the 2%. This is what we need to understand. Couple of questions at this, students. I'll just take quickly one by one and we'll go further. Namita has a question. So if credit note is issued after the time limit, that is September, by the manufacturer of drugs, then his tax liability is nil, not deducted. So what will happen to the such credit note? Now, first and foremost, Namita, GST portal has been designed such a manner that after September, there is no provision for the supplier to report a credit note pertaining to the previous financial year. So the moment I don't report, the question of reduction of my output tax does not come into picture. So answer to your question, Namita, vendor cannot issue invoice with credit note after September. Even if he is issuing, this will not be permitted by the GST portal for reporting. This is the first answer to your question. Next question. To avoid tax evasion penalties, A, provide electronic records in binary language of 0 and 1. Definitely you can do that. Now, when I say records are maintained in electronic fashion, the record should be in a readable fashion. If the registers are not maintained in readable fashion, now Namita says the assessee has maintained in a binary language. So when I call for a sale register 0101000111, some language is there which is a codified language. Answer to that question, Namita, record should be maintained in a fashion which can be read and understood by every person, not by only a person who maintains such records. Next question. If a transport is not registered under GST, then just by enrollment of e-way bill, can he generate e-way bill? Answer is yes. The exception to my GST registration, a transporter who doesn't have a GST number, using his PAN number, he can generate a enrollment number. That is permissible. Further, delivery challan to be issued in movement of goods for other than supply. So why is it written that the value of delivery challan adopted in e-way bill? For the purpose of taxation, Namita, there is a law that if the goods are meant for supply, then you pay GST. If the goods are not meant for supply, we should know what is the value of supply. I'll just give an example. For the brevity of other students, I'll explain this question posted by Namita. In a delivery challan, I mentioned that why the goods are moving other than supply. When the goods are not meant for supply, why is that I have to mention a value for that delivery challan? Why is that I have to prepare an e-way bill for that? That is the question which is asked by Namita. Now, take an example. Say there is a contractor, there is a civil contractor. The civil contractor does a work in various states. Let us take an example, Haryana, Uttar Pradesh, Punjab, Delhi. Now, these are the 4 states which are connected together. A civil contractor, he does a contract in Delhi, Haryana, Punjab, and Uttar Pradesh. Now, part of the contract, he has got a concrete mixture. This concrete mixture, I give it on a hire basis. I'm a service provider. I'm registered in the state of Haryana. My concrete mixture goes from the state of Haryana to the state union territory Delhi. From Haryana, it goes to Punjab. From Haryana, it goes to Uttar Pradesh. On the basis of number of days this concrete mixture has been used, I raise a daily invoice. So per day, my rental charges are 20,000. If the concrete mixture is used for 5 days, I bill for 1 lakh. If the mixture was used for 2 days, I bill for 40,000. Now the question comes here is, the goods which are in transit needs to have an e-way bill. The goods which are in transit, if the value of those goods exceed 50,000, under Rule 138, e-way bill is compulsory. Now here, please understand, the concrete mixture is going for rendering a service. Government is not bothered with your service value. Government is bothered whenever there is a movement of goods on road, that value, if it is exceeding 50,000 or a threshold limit notified, you need to have an e-way bill. And that particular concrete mixture, which is meant for movement, which is meant for service, after completion of service, I raise a tax invoice. How do someone get to know what is the value of concrete mixture? As per your books of accounts, the value of concrete mixture is 20 lakhs. That value is what we adopt only for the purpose of disclosure. Now, what if The concrete mixture has gone from Haryana to Uttar Pradesh. It never came back. When there was a departmental audit, they say that, Praveen, you made a supply of concrete mixture worth 20 lakhs using a delivery challan. It has never come back. So why shouldn't they consider that as a supply? These are all practical reasons why a delivery challan with a value and e-way bill is insisted for movement, though it is not meant for supply. So to answer the question for Namita and other students at large, e-way bill, the value disclosed in e-way bill, and a delivery challan, though it is not meant for supply, this is a logic behind it. So if goods take 2 days to reach destination, my e-way bill will be extended now. If a person who has tea, coffee with will auction it, how in auction principle? Question is incomplete, Namita. Next question. GST registration is state-wise. How unique common enrollment number is allotted? It is on the basis of PAN. Now, these are the questions so far posted for me. I've cleared all the questions, Namita. Section 51, Durga Rao says, sir, is it applicable for services? Supply of goods, supply of services. Anything, TCS is applicable. Durga Rao, answer is yes. Next couple of other questions. Sahu is asking, what will be the sequence of remaining chapters? Will you sequence? There is a timetable mentioned on the Board of Studies portal. You can just go through that, Sahu. Naveen has one more doubt. Sir, let's say supply is under 9.3, that is under reverse charge. In case supplier is registered, case supplier is not registered, what will be the TDS implication? Now, Naveen, please understand this concept of TDS has been brought only when the supplier is registered and charging TDS on that. If there is applicability of reverse charge, by default under section 9.3, these authorities like except the notified like State Bank of India, then Nationalized Bank, rest all three categories, they enjoy exemption even for reverse charge. So if I am a service provider called security contractor, I render services of security. My services are under notified list called recipient has to pay tax on reverse charge. For a moment, let us assume that I, as a security service provider, render services to Rajasthan Electricity Board. Now, Rajasthan Electricity Board has been exempted from the purpose of registering and paying taxes on RCM. And for that particular supply, though since I have not registered myself, no TDS will be done by Rajasthan Electricity Board. This is the answer to your question, Naveen. Further, Akshay has one more question. In page number 12.6 for TDS, it is given as supply worth 10 lakhs get GST rate 18%. TDS should be given as 2 lakhs. How? Let me check that, Akshay. Just give in the break, I'll refer to that particular thing. I'll definitely answer your question, Akshay. Next. Why Haryana? Namita, I have answered your question. If not clear, please let me know. I'll explain once again. Section 51 is applicable for services? Yes. Sumit has a fantastic question. Sir, is it possible to have TDS and TCS at the same time? Absolutely not. Mutually exclusive. TDS, government notified agencies and authorities. TCS, e-commerce operator. I cannot have any of the government officers doing a business. In fact, government is not expected to do business. Please keep in mind, government is not expected to do any business activity, right? Now, moving further. Yeah. Today's coverage, today we will have an understanding on few of the definitions with respect to export and imports under GST law. We will have few provisions discussed, we will recap our discussions on export and import, and finally zero rated supply on the provisions concerned. Before that, I'll just come to my Excel file to give you a backdrop of a couple of examples, which makes it clear for you to understand why we need to study this export import under GST law. Now, so there is a space which we have created. Now, I look at this chapter this way. I look at this chapter this way. Whenever you take up a role of consultancy, whenever you get a role of a corporate entity, your role comes not only with respect to fund management, your role also comes with respect to having a vision, having a tax planning. If some investor comes to you and says, Akshay, I would like to start a business. I have a planning where I would like to invest for a sum of rupees 25 crore. Predominantly, my nature of business is such a fashion. I do this particular process and I do export back. Now, when an investor comes to Akshay, Akshay thinks a lot and says, Praveen, you have proposed that you are going to come with an investment of 25 crore. On 25 crore, for a moment, let us assume that the capital investment on plant and machinery is somewhere around 18 lakhs. Land and building is somewhere around, say, 6 crore. And others is around 1 crore. My total investment is of this much. Now, assuming for a moment that there is a 18% GST applicable, not on land and building, let us assume that 50% of that building construction has got that civil labor all put together. Now, this is the exposure on account of your GST. Now, 3.96 crore. Akshay comes and says, Praveen, you have given your business model. You have given clearly what is expected out of your business. Now let us look at this way. You don't register yourself as a DTA. You think of yourself to get start yourself as a SEZ unit, or you enroll, you register yourself as a EOU. We will try to get some benefits of import related customs notifications where you can save this duty worth 3.96 crore. And as a consultant, you get a premium when you give tax advice to save, to give a best tax planning. I'm not giving a tax evasion. I'm just giving an example of tax planning. You save the 3.96 crore and assuming 20% is your consultant fee. 3.96 on that, you are entitled for 20% as a fees on your savings. 79 lakhs is the fees. Just because one particular company gave advice, straight away you get this much amount as your consultant fee. I'm just giving a futuristic thought process. What is that in their store for you from this topic called exports and imports under GST law? I have put a box where I have put exports, SEZ supply, deemed exports, EOU, benefits of taxes or GST under the law. Now, this entire session, today's session, we will discuss what do you understand by import, what do you understand by export. Whenever there is an import, there is applicability of customs duty, there is applicability of relevant duties and taxes. At the same time, whenever there is an export, export comes with a predetermined conditions. When you want to export goods or services, you can do so, export your goods or services, not the taxes per se. Now, while doing exports, what is the safety precautions I need to keep in mind? As a SEZ supply, today's session, we will have a little understanding on SEZ supply in detail of this entire topic. When we move into foreign trade policy, customs law, there we have a separate provisions. Chapter 6 of my foreign trade policy deals with SEZ supply. In between, you have something called deemed exports. Deemed exports is a transaction where the actual export does not happen out of India. The exports were, the consignment will be given to a person. That person exports out of India. So there is a concept called penultimate sale. Under the erstwhile VAT laws, penultimate sale, where the actual exporter is one person. A step before is called as a person who is called as a deemed exporter. The person who sells to a person who is directly exporting, that person will be called, that transaction will be called as a deemed exports. Now, these are the various provisions what we have where there is a saving of your taxes. The moment I say saving of taxes, it could be now how my saving of taxes can happen. Saving of taxes could be an absolute exemption or a refund. That means to say, I as a businessman, if I want to get the benefit of taxes, I get a sort of registration way. I completely do away with payment of taxes, or government says you pay the taxes, file an application for claiming refund. These are the two routes. These are the two ways which are available in front of a businessman. Now, this is what we need to understand from the entire today's topic of discussion. In the process of doing so, we will touch upon the aspects connected with your customs law. We will touch upon few aspects which are connected with your place of supply provisions. Section 12 and 13. I would recommend students, examination point of view, don't boggle yourself with your remembering of section name. I would recommend try to understand the concept, the logic behind the concept, how to apply the provisions. Just go with that. So you understand couple of customs law provision, you understand a couple of your place of supply related provisions. Finally, we will study something called zero rated supply. And in connection with all these three, there are certain procedural provisions which we need to study. So today's further 2 hours session, I'll stress and I'll take you through all these relevant provisions, how it will help someone to understand in case of import, where does the tax get attracted? Is there a way I can get away from payment of taxes? In case of exports, what is expected from me and how do I take the advantage of the taxes which is sitting in my balance sheet under current assets, under loans and advances? The money which is sitting in your loans and advances, though it is under current asset, can I push it down further to something called bank or cash balance, where I can encash my money from the government by way of a refund? The next topic in line, refund, is connected with this particular topic called export and import under GST law. Students, before we start, I recommend please have your institute material in your hand. This institute material will take you through, will help you in terms of understanding a couple of provisions as we discussed through. Make use of your pencil. This is your module 3 of 4 institute material. Please have this institute material. We will run through a couple of definitions and you can make a running note as we run through. Starting point, my provision dealing with customs area. Customs Act has defined this term called customs area. Customs area, simple terms, it's a customs place, or it is a station, it is a warehouse, or it includes area where the imported goods or the goods which are meant for export generally kept within the customs, within the premises of a customs control. Simple terms, customs area is a bigger space where it could be a customs station. So when I say customs station, your airport, inland customs station, your foreign, what you call export or import courier station, all these stations I can call as a customs station. So it's an area which is a customs station, designated area where goods go out of India, goods come into India, or it is a warehouse. What is a warehouse? It's a warehouse is a concept of bonded premises. Earlier under central excise law, every registration, every particular premises is called as a bonded premises. The concept of this bonded warehouse is a place where the goods which are imported into India, they have been stored for a particular purpose. When we go to foreign trade policy, you will discuss at length about the concept called bonded warehouse. As a student, I would recommend all of you, please wait and watch for this term called bonded warehouse. Reason, This is the one of the tax planning option available in terms of business. The material which have imported into India, you have a storage of space at your warehouse. You have no space at your factory. You can think of putting into a bonded warehouse. You're a trader who is into buying and selling the goods. You need not clear the material directly into the domestic tariff area. You can warehouse the goods, find a suitable customer, sell those goods off. So this concept of bonded warehouse, wait and watch for the customs provisions, where a separate chapter was earmarked for this concept. So my customs area includes a customs station, includes a warehouse, or includes any area in which imported goods or exported goods are ordinarily kept. Now, this is the concept of your customs area. Next, customs port. Customs port is designated, notified port for the purpose of your import or export. Customs station, it includes your customs port, airport, international terminal, foreign post office, or land customs station. Now, these are the area where the goods which have been imported. Now, this is connected with understanding whether the import happened, whether the export took place, whether the goods have touched Indian soil for the purpose of levy of IGST, whether the customs duty can be levied for the purpose of the goods which are in discussion. All these three definitions are connected for us to understand when is the point of triggering point for the purpose of levy of customs duty, right? From that backdrop, these definitions. In fact, when you go to your customs provisions, in detail, you'll study these particular provisions. Now, export. The term export has been defined under GST law and IDTL law, where they say that its grammatical variations, it means taking the goods out of India to place outside India. Goods which have been taken outside India is called as export. Example, sir, I'm an exporter. I prepared an invoice where I say I supply 10 bottles of particular pickle to my customer in Singapore. I prepared an invoice for 10 bottles. This 10 bottles along with the invoice was given to DHL courier. The moment I have given to DHL courier, my job is done. I call that as export. I declare in my returns as export. Answer would be, Praveen, till the goods cross the customs frontier of India, till the goods go out of India, it is not to be considered as export. So when there is a shipping bill, till the goods doesn't cross, it is not to be considered as export. The moment the shipping bill is prepared, from there the journey starts and goods go out of India. Next. Customs frontier of India, it is a limit of a customs area defined in the Customs Act. Now, this term customs frontier of India is relevant when we talk about import of goods into India. So whenever we talk about import, we need to understand. So the goods, when it is presumed to be touched the Indian territorial waters, can I make a sale prior to hitting territorial waters? Can I make a sale after hitting territorial waters? The benefit of GST, once examined, I have to take a decision. How do I structure my sale such a way that I don't get exposure into taxation? My customer can take the burden of all the compliances under the GST law. Import of goods, export of goods, import with its grammatical cognate variations and expressions, it means bringing goods into India from a place outside India. So import happens when the goods are brought into India. For the purpose of definition of India, again, we will touch the customs definition to understand when the import happens to take place. Exports, we have discussed. Export of services. Now, this definition, when we are discussing the place of supply provisions, we had an at-length discussion. The important point to understand is, in terms of exports, my place of supply, the place of supply of service is to be outside India. For understanding this clause 3, which we have highlighted, you need to refer to section 13 of IGST Act. Section 13, when we have discussed various provisions when a place of supply happens to be outside India. So whenever we talk about export of services, one of the predominant condition I need to take care is place of service happens to be outside India. If the place of supply is outside India and with other conditions, service provider is in India, recipient is outside India, payment has been received in convertible foreign currency. These are the basic conditions revolving with my export of service. Import of service, this we have discussed while dealing with section 12. So I'll skip this for a while. Non-taxable online recipient. This is one definition I'll stress little on to give an importance of why is it important, how is it important. Take an example. Say Akshay has downloaded a particular audio session of a particular programming. Akshay is into technology. He wants to learn some technology aspects. Sitting in, say, Jamshedpur, Akshay has downloaded a particular license related audio book. This audio book costed Akshay some $50. So when Akshay is downloading that, it is for his academical interest. Now let us look at this definition. A non-taxable online recipient means a government, local authority, government authority, or an individual, or any other person who is not registered and receiving, online information database access or retrieval services in relation to any purpose other than commerce, industry, or any other business or profession. Now, Akshay is an individual. Why is he downloading that software? He's downloading the software for his academical interest. Is it for business? Is it for commerce? Is it for industry specific? No. Now, when all these conditions are satisfied, then Akshay will be called as non-taxable online recipient. Like you get a insulation from payment of taxes. So when we talk about this definition, a government authority, government, local authority, or a governmental authority, individual, or any person who have not registered, these people have not registered themselves under what? Under GST law for receiving this online information database access or retrieval service. So when Akshay has downloaded that software, it is an online access through a e-commerce platform. He downloaded that software. In that scenario, Akshay will fit into this definition called non-taxable online recipient. Let's take another example. Say Rajasthan Water Supply Board, Rajasthan Sewage Board, Rajasthan Educational Board. Now, any of these government undertakings, for a moment, they download a particular software called MS Office. Now, they have purchased a license from website for the purpose of their internal use. Now, government authorities cannot be saved into the business or commerce. Please keep in mind, government authority is not, when they have downloaded this software, they have not downloaded for the purpose of your business or commerce. That those authorities will be called as non-taxable online recipient. Students, this is one definition. Please keep in mind, reason when we talk about import of services, you have doubts which will get clarified from this definition. Moving on further. What is the online access, information database access or retrieval service? This also we have discussed when we discussed on section 14, when we are talking about place of supply provisions. Students have missed that session. Don't worry, I'll repeat once again for the brevity of understanding. OIDAR. This is the abbreviation we use, Online Information Database Access Retrieval Service. This means a delivery which is made through information technology, where requisite of internet or electronic network, the nature of that particular supply, where it has been automated, where there is a human intervention which is zero, where this particular platform can be used for the purpose of advertising, can be used for the purpose of cloud services, can be used for the purpose of providing e-books, music, software, intangible through a telecommunication network, providing data or information, retrievable or otherwise, to any person in electronic form through a computer network. Online supplies of digital content like movie, television, Netflix, for an example. Digital data storage. You have this Google Cloud. These days, most of our CA offices, if you see, we have been working on cloud storage. Like most of our offices either have OneDrive or your Google Drive. What we do, we put all the office data into OneDrive. Sitting at your home, you can just get the access of that OneDrive. It is as good as a local drive. You just open that local drive, entire files are saved in that particular drive. Now, when you have no internet connection, you will not get the connectivity of that drive. This is all the data which happens essentially through an e-commerce platform, online gaming. Now, these are various activities which gets undertaken by this particular activity called Online Information Database Access Retrieval Service. Any of these particular services provided through a OIDAR. Section 14 of IGST law says that the service provider, if he renders service to an online non-taxable recipient, then that service provider should pay taxes. In the example, we were talking about Akshay. When Akshay downloads the ebook for the academic purpose, he declares, are you using for business purpose? He'll say no, academic purpose. And when he downloads that particular software, he'll be called as a non-taxable online recipient. He may not pay any GST on that particular software downloaded. Now, this also we have discussed in the last session when we discussed on the place of supply provisions. But again, for the brevity, we will discuss this once again. My Article 269A, Article 269A has been introduced to define when a particular supply happens to be an interstate trade or commerce under GST law. So whenever GST has to be levied, there should be a definition for what is to be called as an interstate trade or commerce. In the case of interstate trade or commerce, who has the authority to levy taxes? Now, when goods are imported into Tamil Nadu, when the goods are imported into the state of Karnataka, now it is so cumbersome for the states to get the revenue. Not to have the dispute between the states, they have defined this 269A, where the clear boundary for the purpose of levy of tax by virtue of Section 7, Section 8 in your IGST Act, they have defined what is the interstate trade or commerce. In the case of interstate trade or commerce, how a tax administration will happen. This is what we need to understand from Section Article 269A from your Constitution. Now, in case of imports, my Section 5 of IGST law defines. In case of a interstate supply, there shall be levied a tax called Integrated Goods and Services Tax on all interstate supplies of goods and services. Now, when we talk about goods which are imported into India, there shall be levied and collected in accordance with Provision 3 of Customs Tariff Act. Now, Section 5 clearly has defined whenever goods are imported into India, those goods, there is a levy of IGST. How? Under Section 3 of Customs Tariff Act. So none of the states have a right to tax on those goods which have been imported into India. For an example, for a moment. So Praveen is a resident of Bangalore. Praveen has visited Chennai for the purpose of importing goods into let's say there is a customs station in Chennai. Through sea, goods have come from Singapore to say Chennai customs station. Praveen from Bangalore went to Chennai to file a bill of entry and get the goods here. Now the question comes here, because the ship has reached the soil of Tamil Nadu land, the taxes which are collected by way of GST should go to Tamil Nadu government, or since Praveen is already registered in Karnataka, should the taxes go benefit to the Karnataka government? All this set of dispute does not come into existence. For that particular purpose, my Section 5 clearly has defined on the goods which are imported into India, there is a levy called IGST. How this IGST is collected? IGST is administered under Section 3 of Customs Tariff Act. So what I will do, when I file my bill of entry, Under bill of entry, I'll just give my GST number. On the basis of GST number, I pay IGST. Sir, if you import in Tamil Nadu, do you pay IGST? If you import in Karnataka, do you pay SGST, CGST? Answer is very simple. As an importer, I have a right to import anywhere in India. Wherever I import, I pay only one tax called IGST. If the goods come from Germany to Delhi, if the goods come from Germany to Tamil Nadu, if the goods come directly to Kerala, if the goods come directly to Karnataka, irrespective of which state I am registered, there is one levy called IGST. This is a starting point with respect to your import of goods. Moving on further. For the purpose of value, when I have to pay GST, I go with the customs provisions. Section 12 of Customs Act is relevant for me. Now, as I've said, my section 7 has defined what is to be interstate supply. And my section 8 has defined what is intrastate supply. So under section 7, couple of points are relevant for us to understand. Supply of goods imported into territory of India till they cross customs frontier shall be treated as supply of goods in the course of interstate trade or commerce. I repeat this point once again. Supply of goods imported into territory of India till they cross customs frontier of India shall be treated as supply of goods in the course of interstate trade or commerce. For an example, Namita is in the state of Kerala. Naveen is also in the state of Kerala. Namita has imported goods from, say, Japan. The goods have yet to reach customs frontier of India. Namita wanted to sell the title of goods from her to Naveen. Now, look at this transaction carefully. Where is the supplier? Supplier is in Kerala. Namita, she is in Kerala. Where is the buyer? Naveen is also in Kerala. Though Namita and Naveen both are in the state of Kerala, this transaction, supply of goods imported into territory of India till they cross the customs frontier. The goods have been imported into territorial waters. The goods have touched the territorial waters, but it is not clear from the customs station. It is still in the customs station. When Namita sells the goods to Naveen, it will be called as interstate supply. This is called interstate. Though both are in the same state, it is not an intrastate, it is called as interstate. Whether it is taxable, whether IGST is payable, wait for a couple of minutes, we'll have a clarity with respect to levy of GST. Now, this is with respect to goods which doesn't cross customs frontier. Supply of services imported into territory of India shall be treated as supply of services in the course of interstate trade or commerce. Similar to the goods which are imported into territory of India shall be treated as import of service. That is interstate supply. Supply of goods and services are both when the supplier is located in India, place of supply is outside India, to a SEZ developer or SEZ unit shall be treated as supply of goods and services in the course of interstate trade or commerce. Now, supplier is in India, my place of supply happens to be outside India. So how place of supply happens to be out of India? I need to refer to section 11, section 13. I need to refer section 11, section 13. Please make notes, students. Section 11, section 13 of IGST Act. Don't bother much on the sections. Just understand the concept. When a supplier is in India and the place of supply is outside India, sir, how do I know place of supply? Just go to section 11 and go to section 13, you'll get an answer, right? So if the place of supply is outside India, it's called interstate supply. So rendering services to SEZ unit, rendering services to SEZ developer, again, it is an interstate supply. Example, say Durga Rao is owner of a particular hotel in the state of Tamil Nadu. Durga Rao is the owner of a particular hotel in the state of Tamil Nadu. Durga Rao gets a customer from a corporate client and he says, "Sir, I have my company which is registered as SEZ unit. Please consider that as export." Now, understand, the customer comes from a company. The company is also in the state of Tamil Nadu. But corporate client happens to be SEZ unit. For a minute, let us assume that say Akshay, who happens to be employee of Infosys, he comes to the hotel run by Durga Rao. When Akshay comes, Akshay says, "Sir, I come from this so-and-so company, which is in the state of Tamil Nadu." He says that my company Infosys is a SEZ unit. Now, for the purpose of interstate supply, for the purpose of this definition, services given by Durga Rao to Infosys. Now, Infosys happens to be SEZ. That should be called as a interstate supply. I repeat, to or by. Goods supplied to, goods supplied by. I repeat, services supplied to, services supplied by SEZ unit or SEZ developer shall be treated as supply of goods in the course of interstate trade or commerce. So the answer here is, though the immovable property accommodation services given to by Durga Rao to his client, who is also there in the state of Tamil Nadu, if the client happens to be SEZ unit, it should be called as a interstate trade or commerce. This is what we need to understand. Imports. Okay, this we have discussed. This also we have discussed. Yes. Now, this I come to the warehouse goods. Now, the concept of warehouse, I'll come to Excel file to make you understand now. Why is this concept of warehouse has been brought into picture? Generally assuming that goods imported, there is a levy of customs duty under section 3 of Customs Tariff Act. Whenever goods which have been imported into India, there is applicability of duty to be paid on those goods which have been imported. Now, under customs law, there has been a facility where the goods which have been imported can be kept in a bonded warehouse without payment of duty. Under customs law, they have given a benefit. Look, whenever you have imported the goods into India, I give a choice to you. You pay the duty and take the goods for your consumption. You don't want to pay the duty, there is a bonded warehouse which has been clearly demarcated. Warehouse, public bonded warehouse. Bonded warehouse, it is a permission given by the government to run as a bonded warehouse. Why? They have designated some place where your goods which have been imported can be kept, and this is under the supervision and control of customs authorities. Goods which get into that bond house, goods which come out of the bonded warehouse, without permission of customs authority, nothing can be moved upon. That is the reason they say, Praveen, don't pay the duty. You can keep that in a bonded warehouse. Now, why I have to use the bonded warehouse? First aspect, space constraint. Assuming that I am a particular manufacturer, I operate in a particular location where per square feet I pay 80 rupees as rent per square feet. But in a bonded warehouse, I'll pay only 35 rupees. I've been paying 80 rupees in a premises used from factory, but warehouse, I've been paying 35 rupees per square feet. Now, which is economical? Instead of me paying 80 rupees, better I'll pay 35 rupees. I'll just keep it in a bonded warehouse. That is the first example for space constraint. Second example, I import the machinery. I import a particular goods where a minor process needs to be done. Again, I have to export back. Students, this is one area where I wanted all your attention to carefully understand. Let's take example of a generator set. You have seen this power backup DG set, right? Whenever power goes off, the DG set automatically gets on to have an uninterrupted power supply. For a moment, so there is a country called Korea. There is a very much demand for DG sets to be supplied in the state of Korea. There is a particular nation called America. From America, they got an order for supplying, say, 100 DG sets to this particular nation called Korea. Now, this DG set, whatever has to be supplied, it cannot be sold as it is. There's something called engine. There is something called alternator. There is something called a acoustic enclosure. Acoustic enclosure, engine, alternator. All these three needs to be assembled and then to be sent back. Now, the cost of assembly is costly in US. All of you know that US is a consuming nation. So for reducing the cost of operation, this send, say, this alternator, engine, and the acoustic. There are three products. So in India, what I do, I get all these products into the bonded warehouse. I open all the boxes. I take the engine. I assemble the alternator. I put the acoustic on top of it. Then a DG set is manufactured. By the way, a small minor process is permitted to be done in a bonded warehouse. So what I do, I get three kits separately. I open all the three kits. I do assemble. I manufacture DG set. I send it back. Now, please keep in mind, DG set which is imported, the rate of tax is 28%. Rather, engine, alternator, which is independently imported, attracts a rate of duty of 18%. If I import, 18% is the rate of tax for all different pieces. If I import a DG set, I need to pay customs duty of 28%. Now, this is one way a tax planning can be done with respect to bonded warehouse. Third, trade purpose. I'm a regular customer. I import the material. I try to find a customer. I sell the goods as it is in bulk. Now, here, there's something called customs duty. Whenever I pay customs duty, working capital blockage, I pay the customs duty, wait for the customer to place an order, and then supply the material. What I can do, instead of paying customs duty upfront, I just pay the regular rental charges and then pass on the title to goods to my customer, where the burden of customs duty I don't pay, rather this customs duty is paid by my customer. Now, these are the three activities which are undertaken in a warehouse. Why someone thinks of getting into this bonded warehouse rather than getting the material into the domestic tariff area. Now, with respect to this bonded warehouse, the provisions of customs law, there is a permission given under section 46 of Customs Act, where I file a home consumption particular declaration called into bond. So when the material comes from foreign land, I file a particular document called into bond. This is a technical term I use, where I tell to the customs authorities, sir, I'm not willing to pay the duty. I get into the bonded warehouse called into bond. Now, when the goods are there within the bonded premises, Namita can transfer title of the goods to Akshay or Naveen. Whomever she finds, she can transfer the title. That means the owner of the goods, without payment of customs duty, he can transfer the title to the other party. Whoever has purchased, that party will file a bill of entry to pay the customs duty. Now, from bonded warehouse, when the goods have to come back, I call that as ex-bond. So there is a technical term which we use over here. Into bond, when the goods get into the bonded premises. Ex-bond, when the goods come out of my bonded premises. Now, these are the two technical terms we use with respect to the bonded warehouse. The important point comes here. My Schedule 3, section clause 8, subclause 8, my Schedule 3, entry 8, and that clause 8 deals with your warehouse goods. If you read your Schedule 3 of your CGST Act, it says it is neither supply of goods nor supply of services. That means when Namita, who has imported the goods before it is cleared for domestic tariff area, Namita has taken a permission to put it a bonded warehouse. And when Namita transfers the title to the goods on those goods, say to Naveen, then this will be called as a Schedule 3 item where it is neither supply of goods nor supply of services. So Namita will not pay any GST on that particular supply. Now here, from the taxation point of view, under Schedule 3, if there is a transfer of title to goods which are there in a customs bonded warehouse, it shall be not to be considered as a supply of goods nor supply of services. So this is your first advantage. This is your first advantage of your bonded warehouse. Any material which have come to a bonded warehouse, any transfer to title happens in those particular goods. Under Schedule 3, there is a classification where they say it is neither a supply of goods nor supply of services. This is with respect to my bonded warehouse. Now, what is the value for IGST? They say whatever is the transaction value that will be considered. Now, Namita is imported for say $10,000. Namita has sold that particular goods say for 11,500 to Naveen. The last leg in the transaction, what was paid by Naveen, will be offered for the purpose of customs authorities. Now, Namita has an invoice. For $10,000. Namita kept a margin of say 15% and transfer title to Naveen. So Naveen, when he has paid say 11,500 to Namita, he will say, my dear officer, I have paid, this is the invoice where I have paid 11,500 to Namita. I offer that value on the basis of that calculation of my customs duty and the respective taxes come into picture. Next transaction in my queue is high C sale. Now, in the previous example, the material have come to the bonded warehouse where Namita has to get into documentation. She has to file the into bond and she has to take care of that in the bonded warehouse. That's a transaction where material have hit the Indian territorial waters. Material has hit the soil of Indian territory. Now, this is the next transaction called high C sale, where the sale happens in the course of import before the goods enter the customs clearance. I repeat, in the course of import before they hit the customs clearance point. So importer, whoever is the owner of the goods, transfer the title to those goods and buyer will file the bill of entry. So in case of high C sale transaction, what happens? The goods have not hit the customs water. Before the goods have hit the customs water, Namita did a transfer of title to those goods. Now, so why we use that bonded warehouse concept? Why we use this high C sale concept? Now, generally, a trader, before the goods reach the Indian customs water, if he finds a buyer, he gets into this transaction called high C sale. So what if the customer is not identified? Don't worry. You just file that into bond, just keep it in a bonded warehouse. Whenever a customer is identified, you make a sale transaction. That is what we need to understand. Now, like 8A, 8B, Schedule 3 has got an entry for high C sale. What does your entry 8 clause B says? Whenever there is a high C sale, because the goods have not hit into your Indian territorial waters and there was a transfer of title to the goods by way of exchange of this title, then this will be called as a high C sale. It shall be not to be considered as a supply of goods nor supply of services. Please keep in mind, there is no applicability of GST in case of a high C sale because of my entry number 8B. Schedule 3, entry number 8B. Now, this is what we need to understand with respect to high C sale. Before I move further, let me see quickly if there are any questions so far. Namita says TDS to be deducted at 1% by Haryana. Namita, in that example, training related service, If it is an interstate supply, 2%. If it is within the state, 1% CGST, 1% SGST. Because I am in the state of Karnataka, Haryana government is recovering, it is an interstate transaction, 2% will be the TDS, Namita. Ramakrishnan said duty drawback will be covered by you. No, Ramakrishnan, there is another faculty who covers duty drawback. Namita is asking this question. Sir, warehouse is located in customs station, or it in a warehouse is nominated to be one of the customs station, Namita. Any area which is under the supervision and control of customs authorities can be called as customs station. Warehouse is under the supervision control of customs authorities. It could be within the customs premises, it could be outside. Just to give an example, Namita, bonded warehouse, it is not guaranteed that this warehouse should be next to the customs station. The bonded warehouse could be next to your factory. Say for a moment, you are this Rand Baxi. Rand Baxi is a factory who is into pharmaceutical manufacturing activity. Rand Baxi can seek a permission to have a warehouse close to their factory. Now, that is also possible. Customs authorities designate, earmark a particular area which can be called as a warehouse. There are private bonded warehouse, there is a public bonded warehouse. This is when you go to the warehouse chapter, Namita, you'll have a clear-cut discussion on this warehouse concept. Next, Surajit is asking one question. Section 2, clause 16 applicable for paid downloads or paid and free both downloads. It is applicable for all set of downloads. If it is a free download, there is no consideration. When there is no consideration, there is no supply, right? So only those supply where there is a consideration, I go for this OIDR, online non-taxable recipient. Akshay is asking another question. If any CA whose GST registration download Microsoft paid version, then he becomes, yes, Akshay. The moment a chartered accountant is downloading this Microsoft Office, now I definitely use my GST number. I have to pay tax on reverse charge for that service which I have imported. So answer to your question, Akshay, yes, this is not a non-taxable online recipient. Rather, it is the tax to be paid by the chartered accountant himself. Namita has this question. Can we say that these virtual classes by ICAI is a OIDER service? Fantastic correlation, Namita. Online Information Database Access Retrieval Service. Now, tell me one point, Namita. ICAI has been conducting online classes. Now, have you been paying anything to access this particular online coaching? Have you paid any registration fee sort of thing? It's all free version, right? So I connect your question. With Surajit Mahapatra, where there is an absence of consideration. When there is an absence of consideration, it is not a supply. Only in case of a distinct person, where there is a related party transaction. If you refer to Schedule 1, supply of goods and services without consideration, there you may put an argument saying that this may be online database access or retrieval service. Again, to further explain your point, Namita, OIDR is applicable to those particular service provider who are not in a taxable territory. A person who is rendering this OIDR service from a non-taxable territory. Board of Studies ICAI is one of the notified governmental authority, is not OIDR for the simple reason Board of Studies ICAI is within the taxable territory. The online coaching services given by ICAI cannot be called as OIDAR. Reason, section 14, the beginning itself, there is a failure now. Hope I have clarified your point, Namita. There is one continuation of question on high sea sale by Suraya. He says, can the high sea sale transaction fall under import because sale during May before the goods touch the customs frontier? Suraya, this is an interstate transaction. It is not, because it has been notified under Schedule 3, it is not a supply of goods, not supply of services. Can you call that as import? Answer, it cannot be called as import. It cannot be called as import. Moving on further. Now, goods imported by SEZ. The next option we have for us to understand is SEZ. This is a prominent, very important role played by SEZ unit or SEZ developer. One of the good option you can think of giving advice is getting oneself as a registered as a SEZ. Any goods which are imported by a SEZ unit or SEZ developer for authorized operations, there is a exemption from whole levy of IGST on those goods. With reference to customs, by virtue of 64 of 2017, no applicability of customs duty. Please keep in mind, for SEZ unit, for SEZ developer, any goods which have been imported, which are meant for authorized operations, there is an exemption from levy of IGST. Similarly, under customs law, by virtue of 64 of 2017, no need to pay any customs duty for those goods which have been imported by a SEZ unit or SEZ developer. So what happens to services? Services which are imported by SEZ unit or SEZ developer, again, for the purpose of authorized operations, have been exempted. Now, example. Sir, I'm a chartered accountant. I have a client called XYZ SEZ unit. This client is rendering some software related export. They have sought for a legal opinion on applicability of, say, Form 15 CP for a remittance to be paid out of India. My client, who is there a SEZ unit, they wanted a written legal opinion. They are making remittances out of India. For every remittance, their banker is insisting that please get a certificate from your chartered accountant, get a certificate in Form 15 CB, or get a particular order passed by an income tax authority. For that, I, as a chartered accountant, I give a legal opinion to SEZ unit. Question comes here. So when I give an opinion, I have to charge 10,000 towards the legal opinion. Please tell me, should I charge IGST? Should I charge SGST, CGST? Now the first question comes here is, when I read my section 7, this section 7 says that goods or services supplied to or by shall be called as an interstate supply. So first point, it is an interstate supply. Second point, sir, should I charge IGST? By virtue of this notification 18 of 2017, any services which are meant predominantly for authorized operations, there is an exemption from applicability of GST. So if I get a declaration from this particular XYZ and Co from their SEZ officer that this particular legal opinion is in relation to their authorized operations, I am exempted from charging GST on that particular thing. So when I come to SEZ supply, I'll explain in detail what you understand by zero rated supply and how do you understand this term exemption. Now, so all along we have discussed with SEZ, it's clear. What happens to EOU? In case of a EOU, this EOU is export-oriented unit. The main difference between SEZ and EOU, the compliance is in terms of exports out of that particular unit. SEZ predominantly majority for exports. EOU, there is a smaller dilution. EOU can operate any place where they register themselves as an EOU. But SEZ, they have to predominantly be in a SEZ location. I repeat, EOU can be in any location, wherever they want to run an office. They just need to notify themselves as an EOU to the customs authority. But with respect to SEZ, I have to mandatorily operate in a SEZ location. Currently, goods imported by EOU are exempted under this notification. But with respect to GST, there is no exemption beyond 31st March 2021. Only till 31st March 2021, exemption is provided by way of a refund. That means I charge GST and the concerned unit can claim a refund of that. Next. Sir, now we are, as a professional, we will do a transaction little more innovative manner. Now you have been telling all along, goods are imported into India, which is there in a customs bonded warehouse. You have said that goods are in the process of importing into India. You have said about a high seas sale transaction. Now let us go one step ahead, where the supply of goods happens without even actual import. Now, this is the next level of your business planning. This is a tri-party transaction where the trade is an international transaction for purchase and supply. Let's take an example called Mr. A, who's a midpoint, who's in a tri-party transaction. There is a seller, there is a buyer. These two parties are connected or interacted or introduced by a particular person called Mr. A. Mr. A, who is there in India, there is a buyer who is there called ABC Incorporated in USA. There is a supplier, there is a seller called XYZ Incorporated in Japan. So now here, there is a transaction where Mr. A raises an invoice on ABC Incorporated, where for that particular invoice, the physical movement of goods happens from Japan to USA. Please understand this transaction carefully. There is a purchase order placed by ABC Inc. on Mr. A. To the order which was received, Mr. A raised an invoice on ABC Incorporated, where the movement of goods from Japan directly happens to USA. Now here the goods from Japan have not come to India. From India again travel back to USA. Rather, right away from Japan, the goods were destined to reach to USA. Now in this particular transaction, though there is no actual import of goods, though there is no actual export of goods, as per Schedule 3, Para 7, this shall be called as neither supply of goods nor supply of services. Since there is a transaction which is taking place outside Indian territorial jurisdiction, my Schedule 3, Para 7 has identified this transaction saying, because this is an international transaction, I, as a GST lawmaker, failed to tax this particular transaction. That is how they brought in this entry called Para 7. Please remember, Para 8, Clause A, with respect to bonded warehouse. Para 8, Clause B, high sea sale transaction. Para 7, tri-party international transaction. This is what we need to understand with respect to tri-party international transaction. Any doubts on this particular tri-party transaction, students? Please let me know. There are a couple of other questions. Durga Rao is asking, GST filing is not possible from 13th to 15th. Right now, this provision has not been invoked, Durga Rao. Actual version of law, like way GSTR 1, GSTR 2, GSTR 3. As per the original plan, these three particular forms have to be notified. As of today, GSTR 1 alone has been notified, GSTR 2, GSTR 3 is not there. So this particular condition is not applicable now. Out of context of your question. Durga Rao, your question is little ambiguous, ma. Should I get, can I take eligible ITC under 2A or 2B? Are you asking about the form in GST 3B? I'm not clear with your question, Durga Rao. Namita is asking, sir, as ICAI is not related to us. It is not a related party, but it is in taxable territory, Namita. To be called as a OIDAR, the service provider should be in a non-taxable territory. ICAI is in taxable territory. I cannot call that into this example. Then there is a question from Durga Rao. I purchased goods worth 1 lakh and GST 18%, who's opted the QRMP scheme April 2. He has paid 18,000 in May, but filled his return for quarter 1. Returns part, Durga Rao, I request you to hold it for the returns part. When we come into returns, in detail, I'll discuss one by one with respect to these practical issues, Durga. Hold on to that. Since we are discussing on import-export, let us restrict to that particular subject. GST paid on inputs or input services can be eligible as ITC if the final product is okay. This again, Durga Rao, I have a separate slide which I'm covering in this particular aspect. So just wait for another half an hour. I'll come to that particular question. Let's come back to the presentation. Yes. Moving on further, import of baggage. Baggage, this is one question which is tested from customs chapter. 3 marks is the weightage on this topic called baggage. Today's session, I'm not going to explain what is a baggage. I'll just explain this way. Any person who comes into India, along with him, he gets his personal belongings. Say, I go to a particular official visit for US. While coming back, I get a laptop. I get some, what I can say, books for reference purpose. I can call that as a baggage. So when there is a baggage which is being brought into India, there is applicability of customs duty on that particular baggage. But under GST, there is an exemption for the purpose of this particular baggage. Passenger baggage currently is exempted from IGST. Next, import of service. Now, all along we have been talking about goods. We have talked about goods which are imported and kept in a customs bonded warehouse. We have talked about goods which have been by way of a high sea sale. We also talk about goods which have been exported by way of a tri-party international transaction. Now, goods, let us stop there and let's come to the services part. My section 7 of GST Act says that import of services for a consideration, whether or not in the course of business, shall be considered as a supply. So please understand, there is a applicability of supply from this import of service point of view. Now, when you refer to para 4 of schedule 1, what is schedule 1? There is a supply of goods and services where there is a consideration. When there is a consideration not in existence. So when we refer to schedule 1, consideration is not in existence. So when there is a supply of services, that is import of service from a parent company by a entity which is there in India, which is called as a distinct person. If services are imported by a entity, by an organization from one particular nation to the India, it can be called as a supply in the course of furtherance of business. This is elaborated in my para 4 of schedule 1. Then section 5 of IGST Act, which talks about your IGST on all interstate supply of goods or services. They have defined what is a notified list. They also have defined when services are taxed by a e-commerce operator. Predominantly, whenever we talk about import of services, the question comes here. So who has to pay tax? We were talking about an example where Akshay is importing a service for his academic purpose. Should Akshay pay tax on that particular thing? When there is a Rajasthan Electricity Board, Rajasthan Education Board have imported Microsoft Office, or a chartered accountant in practice has imported service, that is Microsoft Office, for his office purpose. Now, when we talk about all these examples, question comes here is, so who has to pay tax? The question for that, in case of import of service, the person who has received, the person who has imported that service in India shall be a person who has to pay tax. I repeat, when I receive a service, when there is an import of service, recipient of such service has to pay tax in India. Exclusion, non-taxable online recipient. That is, in case of an OIDA service, non-taxable online recipient shall not pay tax on that particular import. Please keep in mind, in case of import of services, other than non-taxable online recipient, the person who is imported shall pay the tax. So what if there is a transaction in relation to transportation of goods by a vessel from a place outside India to a place in India? Now, this is one particular point where there was a settled law as of today in Gujarat High Court. Right now, it is pending at Supreme Court. I'll give you a backdrop of this particular point and then I'll explain in detail. When we talk about transportation of goods by a vessel from a place outside India to a place in India, for example, say there is a consignment which is coming from Japan. From Japan, when the consignment is coming, it touches the customs frontier of India. I, as an importer, go to the customs authorities. I have to give my value of invoice. On the basis of my invoice value, customs authorities do the determination of tax and they levy tax. At the point of taxation, they say, whatever is CAF value, you pay tax on that. So cost of goods, insurance, freight. My freight also I have paid customs duty. Under IGST Act, under section 5, there is a reverse charge applicable for that particular freight on which I have to again pay tax to Indian government. Now there is a double taxation which is happening only in relation to this transportation of goods by freight, transportation of goods by a vessel. So in this case, once I paid duty of customs for the purpose of customs levy, also on reverse charge, again I have to pay tax on that particular supply. As of now, this particular entry is pending at Supreme Court to get struck down because it is a double taxation. Moving on further. In case of an online information database access retrieval service, the person who is rendering that service shall pay the tax on that particular import of service. So students, this is all till now with respect to importation of services. We are at 8 o'clock. Let's take a break for 5 minutes. 8:05, we will resume back our discussion. Let us continue with our discussion. Import of service. Let me just see if there are any questions so far. There's one question from Namita. How these classes service is covered under Schedule 1? How these classes are covered under Schedule 1 as IC is not our related or distinct person. Okay. Namita, this particular services, online coaching classes conducted by Board of Studies is no way can be called as there is a related party transaction between students and Board of Studies ICA. Employer-employee, this relationship does not exist between ICA and students. Okay. So because there is no existence of any relation, there cannot be a definition, deeming fiction saying that there is a distinct person between relationship between Board of Studies and ICA. Because there is no relation, because there is no establishing the connection called a distinct person, you cannot call the transaction, that is the services rendered by Board of Studies is covered under Schedule 1. It does not fit in, it gets away, it doesn't even come into Schedule 1, right? So it is, there's no distinct person concept between students and Board of Studies ICA. No questions other than this. Let's come back to our discussion. Now, important aspect, zero rated supply under your section 16 of IGST Act. Exports read with zero rated supply. The term section 16 of IGST Act, section 16 of IGST Act is discussing something on zero rated supply. So whenever we talk about zero rated supply, it means supply of goods or services, namely export of goods or services or both. So when I say exports, there is a definition of export of goods. When I say services, service provider is in India, service recipient is also in India. My place of supply happens to be also in India. That I call as export of service. Export of goods, we have understood. With its grammatical meaning, it is going out of India, right? Exports we have discussed. So when I say zero rated, export of goods or services. Point number 2, supply of goods or services or both to a SAZ developer to SAZ unit. So please make a note in your institute material. When we talk about your zero rated supply, this means that export of goods outside India or export of services outside India or supply of goods and services to SAZ unit. This is called as your zero rated supply. Page number, page number 14.32 of your institute material, zero rated supply. So whenever there is a goods or services actual export or goods or services supplied to SAZ, these two have been defined as zero rated supply. Now, moving further. Now, this zero rated supply, whenever we talk about supplies which is either exports, which is supplies to SAZ, I have defined them as a zero rated supply. So this provision says that, look, whenever goods have been considered as a zero rated supply, the benefit of ITC is extended. The benefit of ITC is extended. That means only restriction which is there in the notified list under 17.5, barring that, the assessees the registered person can enjoy input tax credit, though the goods which have been exported are a exempt supply. I'll give you an example to make you understand this particular provision in detail. Zero rated supply. I'll give you a couple of examples. Let us examine them one by one and go further. Serial number, transaction. Serial number 1. Goods supplied to Mrs. ABC and Co. a EOU unit. Goods supplied to Mrs. PQ INC in Germany. Services rendered to Mrs. PQR Bank Limited, a German bank, Japanese bank in India. 4th, supply of mineral water taxable to Mrs. HPC Limited, a SEZ unit. Now, for each of these transactions, let us examine one by one whether it's a zero rated supply, yes or no. The test of zero rated supply, let us examine for each of these transactions. First transaction, goods are supplied to Mrs. ABC and Co, which is a EOU unit. Can I call this as a SCZ? Can I call this as a zero rated supply? Yes or no? Students, what would be your answer and what basis you say yes, what basis you say no? Please confirm. For point number 1, goods supplied to Mrs. ABC and Co. This entity ABC and Co is a EOU unit. What would be your answer? What would be your answer? Please read carefully. This ABC and Co is a EOU unit. What would be your answer? Is it a zero rated supply? Not a zero rated supply. And what would be your reason? Also, give your point by point, your answers. We will discuss one by one. Akshay says it is a EOU unit involved in export. And his answer is yes, it is a zero rated supply. Okay. Let me wait for a couple of other answers, Akshay. Meanwhile. And students, I would recommend please have your institute material in handy. Whoever have access, please have access to this. If not in a digital form or my material, have one of the material as a reference now. It will help you for your revision even in your examination time. So far Akshay gave an answer that it is a zero rated supply for point number 1. Others, what is your view? Is it a zero rated supply or not a zero rated supply? Now, Akshay, Durgarao says, yes, it is a zero rated supply for supply of goods to EOU. Okay. Now, let me come back to my presentation. Students, please pay attention to this slide. Zero rated supply means the following supply of goods or services. What is that? Export of goods, export of service. The term export is important. Export, all of you know that with its grammatical variations, taking goods out of India, I call that as export. In case of export of services, service provider is in India, service recipient is outside India, place of supply happens to be outside India, money has been received in convertible foreign currency. Now, apart from these two exports, supply of goods or services are both to a SEZ developer to a SEZ unit. So my supply is to a SEZ developer. My supply is to a SEZ unit. Only these two. What is that? Point number A, point number B is called as zero rated supply. Other than these two, rest all may look like an export, but actually it is not a zero rated supply. Reason, section 16 has defined what is your zero rated supply. Now I'll come back from here to my Excel file to understand the answers. First question, A, B, C and Co. Is it a SEZ unit? Is it a SEZ developer? Answer, no sir, it is not a SEZ unit, not a SEZ developer. It is just a EOU unit. Is the good supplied to ABC and Co. with its grammatical variations? Has it gone out of India? No, sir, it has not gone out of India. ABC and Co. is a unit within India, supplies to ABC and Co. with its grammatical and variations, has not gone out of India. So when these two conditions have not been satisfied, I wouldn't call that as a zero rated supply. So Akshay, Durga Rao and Surajit, did I clarify this point? All three of you have said yes. So I'm answering to this point once again. Oh my goodness. Namita, you also say yes, it is a zero rated supply. So all of you who have said it is zero rated supply, please test your answer. Reason, EOU is not a SEZ unit. EOU is not SEZ developer. So when EOU is not SEZ unit nor a SEZ developer, my supply of goods cannot be called as zero rated supply. Are you clear with first point? I could see yes. Okay, good. Now, coming to the second point. Point number 2. Goods are supplied to Mrs. PQ Inc., who is there in Germany. Now, goods supplied in Germany with its grammatical variations, export means taking goods out of India. Since I met with the first condition, I would say yes. For point number 1, I would say no. Students, please note, for point number 1, supplies to EOU, it is neither SEZ unit nor SEZ developer. So answer for point number 1, no. Answer to point number 2, because the goods have gone out of India, I would say yes, this is a zero rated supply. Point number 3, services rendered to Mrs. PQR Bank, which is a Japanese bank in India. Can I call that as an export of service? Can I call that as a services to SEZ unit or SEZ developer? Look into these three and answer your question. Point number 3, answer your question. Let me see the answers for point number 3. For point number 3, Namita says yes, as supplies to a party who is outside India. Namita says for point number 3, answer is yes. Mrs. Speaker Bank is a Japan bank, but place of supply is in India. Hence, it is not export of service. Akshay says, Akshay has got the right answer. What Akshay says, it is not export for the reason PQR Bank is a bank of Japan, but place of supply is in India. Service is rendered to bank within India. Place of supply is not outside India. Hence, it is not export of services. This is a logic in Akshay point. Namita, just because a bank is outside India, but the bank is services are rendered in India, we need to explain, look into the place of supply provisions and then come into a conclusion. If the services are not complied with the place of supply provisions, I cannot call that as an export of services. No. Answer for point number 3, no. Next. Point number 4. Supply of mineral water. Mineral water is taxable under GST law. This supply of water is given to Mrs. HPC Limited, which is a SEZ unit. Can I call this as a zero rated supply? Yes or no? Yes or no? Point number 4. Akshay says for point number 4, yes, it is a zero rated supply. Even Namita says, yes, it is a zero rated supply for that particular point number 4. Good. I also agree with both of you. I would say that this is, yes, a zero rated supply. Now, please understand, first and foremost point is we need to examine, was this export of goods, was this export of service? Is the goods or services meant to SEZ unit, meant to SEZ developer? If these two conditions, point A, point B are tested, and you get an affirmative answer, I call that as a zero rated supply. Now, from here, I move one step ahead this way. Say, Mr. A, registered person in Kerala, for the month of July 21 provides below information. First point, purchase of I can say battery, tires, and engine for rupees, say 2.5 lakh. GST paid rupees, say 65,000. Above goods are used for manufacture of a vehicle meant for physically handicapped. Vehicle, motor vehicle, classified under HSN 85. I would say wholly exempted from GST. Now, please understand this question carefully. There is a gentleman called Mr. A. This particular A is a registered person in the state of Kerala. So in July 21, this gentleman has made a purchases. He has, okay, the value of, I'll also mention, sale of motor vehicle is for rupees 4.2 lakhs. Now, this particular Mr. A has purchased some items, battery, tire, engine, some items, where he has paid on all these items put together 2.5 lakh. $2.5 lakh he has paid as basic value, 0.65 he has paid the taxes on that. In totality, he has incurred 3,15,000. Using all those components together, he made a vehicle which is meant predominantly for physically handicapped, where you have that instead of two-wheeler, three-wheeler. For a moment, let us assume that this motor vehicle has been classified under Chapter 85, which is wholly exempt under GST law. And the sale value is 4.2 lakhs. Now the question comes here. For the goods supplied, can the ITC be claimed? For the goods supplied, can the ITC be claimed? What would be your answer? In this particular question, the physically the vehicle which is meant for a particular sector group, that was exempted under GST law. So he files his return where you say 4.2 lakhs is the supply value. Purchases 2.5 lakh, on that ITC taxes paid is 0.65,000. So the question comes to you, is Mr. A entitled for input tax credit? Yes or no? Yes or no? What would be your answer? If you say yes, why is it, why he can take? If you say no, why he should not take? Give your answer with a justification. Give your answer with a justification. Assuming for a minute, Mr. A supplies the above goods to a customer in, say, Singapore. What would be your answer? Mr. A supplies these goods to a customer who is there in Singapore. What would be your answer? Now, before you frame your answer, I'll come to the presentation. I'll just read this line. You frame your answer accordingly. Section 16 of IGST Act, which has a benefit and restrictions of input tax credit. My section 16 says that subject to section 17 subsection 5 of CGST Act, the credit of input tax may be availed. Subject to section 17 subsection 5, credit of input tax may be availed for what? For making a zero rated supply. Notwithstanding that such supply can be an exempt supply. Notwithstanding that such supply may be an exempt supply. So this is what my section 16 of IGST law talks in relation to zero rated supply. After reading this line, please give your answer. The particular vehicle has been exported to a customer who is there in Singapore. What will be your answer? Absolutely correct. Naveen Prakash says, in case of a zero rated, input tax is available, though it is an exempt supply. Namita says, no ITC as outward supply is exempt. For point number 2, for Singapore customer, ITC is available as it is export. Absolutely correct. Both Naveen and Namita has a valid point. I'll come back to my Excel file. Let me just go back to Excel file. The answer would be here. Answer in examination will say, goods supplied by Mr. A to a customer in Singapore would be called as zero rated supply. I just used the abbreviation called ZRS. Since the goods are exempted under GST, there is a ITC restriction under section 17. However, section 16 of IGST Act overrides the other provisions, and ITC is permitted other than the list under section 17 subsection 5. Please keep in mind, students, section 17 subsection 5, there is a list. So, motor vehicle, insurance, food for catering service, food, your employee pickup and travel related. So there is a list of goods, list of services which are restricted under section 17, subsection 5. Except that list, rest all which is in relation to zero rated supply, I can take the input tax credit. So examination, please wait and watch for a question in relation to input tax. Examination, eligibility of input tax credit. You will be tested one question where a zero rated supply, first you will be tested. Continuation to that, in relation to is there a blockage of credit under 17.5? That is how a question will be tested for 4 marks. Examination, please read carefully the question and then give your answer. So answer to this particular question, yes. In relation to zero rated supply, I can take the input tax credit. Before I go further, for exports, ITC is available. Geeta, your answer is very, very valid, ma. In relation to exports, in relation to SEZ supply, inflow of my ITC credit is seamless except at 17.5. Yes, you are right. For exports, ITC can be claimed in case of zero rating. Yes, Mahapatra, we can take. Then for Durga Rao says GST filing is not possible from 13th to 15th of respective tax period, but it is not blocked, Durga Rao. It is permitted. There is no blockage of time limit between 13th to 15th. Even today, today is 18th, you file, it will accept. You file on 15th, it will accept. There is no blockage. Moving on further. Now, zero rated supply. When I make a zero rated supply, I have been given with a choice. What is that? You export or you supplies to make a supplies to SEZ. Option number 1, with payment of tax, on payment of IGST, or without payment of IGST. Now, first and foremost, please keep in mind, reference to section 7 of IGST Act, exports interstate supply, supplies to SEZ interstate supply. This being an interstate supply, if at all, tax needs to be paid, the tax applicable is IGST. So they say, whenever you want to make a zero rated supply, you may supply the goods or both under a bond or letter of undertaking. Under a bond or letter of undertaking. This in case you want to export without payment of IGST. Or you may supply the goods and services subject to such conditions where you make the payment of IGST, and this IGST, whatever you have paid, you can claim a refund. You can claim a refund. So in relation to zero rated supply, whenever I raise a tax invoice, whenever I prepare a tax invoice, assuming for a minute I am a supplier and my customer happens to pay SEZ unit. For me, two choices are there. Choice number one, I supply the goods to my customer without IGST and claim a refund of whatever accumulated credit is there. Option number 2, I raise an invoice with GST, claim that refund back. Sir, I don't want to claim refund. Simple. You take a LUT, you take a bond, mention that LUT or bond number and raise the invoice without IGST. Now, these are the two options available to me. Again, not to have a confusion, I'll explain this point once again, ma'am. Let me come back to my Excel file. So whenever we talk about zero rated supply, I have been given with two choices. One is without payment of IGST by executing a bond or LUT. Second, with payment of IGST subject to certain conditions claim a refund of IGST paid. Now, let's take an example. Sir, I'm a manufacturer in the state of Karnataka. From Karnataka, I want to export goods to, say, Japan. So when I want to export goods to Japan, I prepare an invoice. I'll put the points here clearly. Manufacturer, customer. In case of manufacturer who is there in, say, Karnataka, customer who is there in Japan. Now, please keep in mind, I can export the goods, but not the taxes. When I raise an invoice of my customer, say value of the goods, say 1,75,000 Japanese yen. 1,75,000 Japanese yen. Now, if this I have to convert into INR, say 70% of that, 1,75,000 into 0.7. In INR, it happens to be say 1,22,500. Just an example, hypothetical example. The goods of worth 1,22,000 when I have to supply to a customer in Japan. Please understand, the customer makes the payment only 1,75,000 Japanese yen. Customer will not pay taxes for that. Assuming that the tax is on these goods 18%. 22,050 is my tax. My total value happens to be with the tax 1,44,550. Put a practical question in front of you. Customer who is sitting in Japan, he'll say, Praveen, I'll pay you only 1,75,000 Japanese yen or equivalent INR 1,22,500. I am least bothered with your Indian taxation called 22,050 rupees INR. Now, when I come to the choice given to me as a zero rated supply, point number one, I export without payment of IGST. So in an invoice, I'll say value of goods so much, LUT number so much, and I export for Japanese and JPY 1,75,000. So far, so good, nothing to worry. Option number two, when I go for with payment of IGST, definitely the counterparty will pay only Japanese yen of 1,75,000, corresponding 18% he will not pay. So what the provision says, you export with payment of IGST, whatever tax you have paid, 22,050, don't worry, you get a refund from the government of India. When you export goods with payment of IGST, you get a refund of that 22,050 back into your bank account. Why so, how so? In the next session, I'll explain you on this refund of IGST of this 22,050. As of now, students, please understand, whenever I have to make an export, these are the two provisions, these are the two methods I have. Export under LUT or bond or supply with payment of IGST. Hope this discussion is clear so far. Durgarao, again, you're asking a question in relation to return mark, QRMP scheme. Don't worry. I'll take up this question, not in this class. For this moment, I'll answer that. Whatever QRMP scheme is there, using IFF statement, he can file a monthly return, and that on the basis of IFF, it will be reflected in the so-called 2B. Next. Akshay says, we are supplying zero rated supply of goods and services. What amount of IGST we have to pay? In case of zero rated supply, Akshay, whatever is the local tax, IGST, whatever is defined under the GST law, the same rate of tax holds good. In case if those goods are supplied domestically, in case the services are rendered domestically, The rate of tax on those goods and services, the same rate even in case of zero rated supply. In LUT or bond, is there any payment practically asked by Surjit? Surjit, LUT or bond, I'll come in a while. Just give me a couple of minutes, I'll clarify that point. Students, this particular point, zero rate supply, hope it is clear for everyone. Let me come back to my presentation. Now, this is one slide. This is one slide which is going to explain you the difference between your zero rated supply and exempted supply. Page number 14.36 of your institute material. What is a bond? What is a LUT? What is the procedure involved? Give me 5 minutes, students. Within 5 minutes, I'll explain the backdrop, how a LUT, how a bond works, what is that I am expected using a LUT or bond. Just wait for 5 minutes. We'll come to that discussion. Now, examination, expect a theory question for 4 marks, differentiate between zero rated supply and exempt supply. So this comparison will be tested for 4 marks in your examination. Page number 14.36 of institute material. To start with, when we talk about exempt supply, the supply of goods or supply of services which is wholly exempt or the rate of tax is shown as nil. I repeat, exempted supply means the goods which are wholly exempt under GST or the rate of tax is nil. This we can call as zero rated supply. So nil rate, wholly exempt. Then it can be called as exempt supply. On the other hand, zero rated supply, as we have discussed, export of goods and services, supply to SEZ. There are 2 points. Export supplies to SEZ unit or SEZ developer. This can be called as my zero rated supply. This is the definition point of view. Second point, in case of an exempt supply, no tax on the outward supplies. However, tax on inward supply shall be taxed for use in such exempt supply. So what they say, I as a supplier, when I supply exempt supply, means when my outward supply is fitting into the definition of exempt supply, I don't charge, I don't recover, I don't collect any tax. I'm selling milk. Milk is exempted from GST. I sell rice without a brand, agriculture produce, no need to charge GST. I render services which are in the nature of your municipality or panchayat under Article 243, which is notified as a key function of a municipality or panchayat, or I render pure services to your municipality or panchayat. All these are the services notified as exempted service. So when I render those services, I as a service provider, I don't collect any taxes. This is my on outward supply. But when I buy certain goods or services, my supplier may charge GST. For an example, sir, I have a contract with Rajasthan Electricity Board for your street light maintenance. Now, street light maintenance is an activity covered under municipality or panchayat. Street light maintenance, whenever light goes off, I have to replace a light. The contract will be called as a pure service or a works contract where 75% of the value is not a material. When I buy a bulb from a particular shop fellow, that shop fellow charges GST on me. But in turn, when I render services to Rajasthan Electricity Board, I don't collect any tax. This is called on outward supply. Now, on the other hand, no tax is there on the outward supply. However, whatever tax I have paid on my purchases, I can claim as an input tax credit, and that input tax I can claim as a refund. Refund, wait and watch for the next session. As of now, in point number 2 here, I cannot take a ITC. Whatever tax is there on inward supply, I cannot take a ITC. But here on the inward supply, I can take a ITC. Remember the example number 2, when I was using that vehicle, manufactured vehicle, which is used predominantly for a physically handicapped persons, I can claim an ITC only if it is a zero rated supply. That is the example connected with your point number 2. Moving further. In case of an exempt supply, ITC is not available. In case of a zero rated supply, I can claim a ITC. Point number 4, my value of outward exempt supply as per section 17 will be considered for reversal of input tax. Please remember rule 42, rule 43. I hope Vignesh sir has covered this input tax chapter where he has taken you through rule 42, rule 43. When I have input tax on common services, I apply rule 42 for reversal on input tax credit on common services. I apply rule 43 for ITC reversal on capital goods. So when I look into the definition of outward supply, outward exempt supply, all exempt supply fit into that definition. For my numerator by denominator, numerator is exempt supply. So when I say exempt supply, all my exempt supply sits in the numerator. Now, in case of a zero rated supply, my zero rated supply has been defined as a taxable supply. That means there is no ITC reversal under rule 42 or rule 43. When I read my section 17, section 17 clearly says that all zero rated supply, that is exports or supplies to SEZ, shall form part of taxable supply. So this zero rated supply, when we look at rule 42, rule 43, this comes in, sits in the denominator as a taxable supply. So when I do a definition, when I do a turnover calculation, my exempt supply, which is there in numerator, this exempt supply will come. My zero rated supply, it is not exempted. It comes into the definition of taxable supply. Now, any person who is exclusively dealing with supply of goods which are exempted, there's an exemption from registration. If you recollect section 23 says all those people who are dealing with goods which are exclusively exempted from payment of GST, no need to register. So in case if I'm a person completely dealing with exempted goods or exempted services, I need not register under GST law. On the other hand, the moment I make a zero rated supply, my section 24 comes into picture. Compulsory registration. Example, sir, I'm a small time businessman. My entire turnover in the previous year is 8 lakhs. In this current year, it may touch to 10 lakhs. Assuming I hail from Telangana and my turnover in Telangana is 20 lakhs as a threshold limit. Now, for a minute, I have an export transaction to Singapore. The moment I make an interstate supply, by virtue of section 24, I need to get registered under GST law. So this is the classification with respect to your registration under exempted supply, your registration for zero rated supply. Before I move further, let me see quickly if there are any questions. Akshay, you have asked a question. Let me quickly look at the question now. Or I think, Akshay, I have your email. There is a list of questions. I'll try to look into your question and I'll answer. Just give me little time. I'll definitely answer. Then next concept is on deemed exports. Deemed exports. This is a new concept which was brought into the GST law, where the goods actually does not go out of India, but the payment for such particular transaction also I will not receive in convertible foreign currency. So the GST Council, like on the recommendations of the Council, this concept of deemed export has been brought into picture. What happens here? In case of a person who is having an advance authorization, in case of a person who there is a supply of capital goods against a EPCG authorization, a person who is having an EOU license. As of today, these three aspects have been classified. As a deemed exports. One is advance authorization, second is EPCG, third is EOU. So here the concept of deemed export says that any goods or services which are given to these three particular things. There is an entitlement of deemed exports, where the person who is selling the goods can pay the tax and claim a refund, or the buyer can pay the tax and claim a refund. When I come to the refund chapter, I'll explain in detail. For a moment, advance authorization EPCG. I'll explain you benefits of these provisions in simple language, then we will go further. Under customs law, like when I have to import the goods, I have to pay customs duty mandatorily. I say that, sir, I have imported the goods, I have to use in a process, and I am going to export it back. Or those goods I supply to a SEZ unit. Then the government will give me a license called advance license. Using the advance license, there will be a value declared. Sir, I want to import 5 crore worth material. I have to export, say 5 into 5 times 25 crores worth material, or 1.5 times, say 7.5 crore worth of material. They will quantify what is the value of goods you have to export back using the goods which have been imported. So if any person who has license, I as a domestic person, I sell my goods to this license holder, that will be called as a advance license. Deemed exports are the GST law. Similarly, EPCG, I import capital goods without payment of customs duty. Those capital goods, I use it for exports out of India. I use it supplies to SEZ. Either of these two cases, I can buy with payment of GST and claim a refund. On the other hand is your EOU. Now, tax as is there in the domestic tariff area, I charge GST and that will be claimed as a refund either by the supplier or recipient. Now, next is your merchant export. Merchant export, this is a new concept which has been brought into the GST law, which I was talking about penalty made sale. I'll give you an example for this. Let me say it this way. There is a particular, when we think of Arabian nations, say Abu Dhabi or your European nations, many of us know that when we look at Gulf countries, majority of people from Kerala or Tamil Nadu have their family members who work in Gulf countries. Now, for a moment, say Namita is a trader. Now, Namita knows that Namita has got a friend in, say, UAE. Now, she says that to her friend in UAE, saying that, look, there are many people who hail from the state of Kerala. I know very well the food habits of these people who hail from Kerala. For a moment, let us assume that Naveen happens to be a person who have a business in Kerala. Naveen sells soft drinks, Naveen sells rice products, Naveen sells ready-to-eat products. But unfortunately, Naveen doesn't have any connect in, say, UAE. Now, Namita approaches Naveen. Do one thing. You give me a package, 5 kgs of rice, 2 kgs of dal, 1 kg of some traditional Kerala pickle and your ready-to-eat pickles, and maybe some soft drink. All packed together as a bundle, make a packet of 1000. This packet of 1000 is sufficient for a bachelor to consume for 10 days. Now, Naveen has a business in Kerala, but Naveen doesn't have any contacts in UAE. What happens? Naveen will sell these products to Namita. Namita will actually do the export to the person in UAE. Now, this entire process I would call as merchant exporter. That means now Naveen is a manufacturer who does the manufacturing. Namita, who's a trader. The actual exports are made by Namita, who is called as a merchant exporter. The actual manufacture is done by Naveen. Now, Naveen, when he sells the goods to Namita, now ideally, when Naveen sells the goods, now it is called as a mixed supply. Refer to section 8, composite supply, mixed supply. I have a packet. If I open the packet, rice is there, tur dal is there, achar, pickles is there, some ready-to-eat mixture is there, and a soft drink is there. Now I have various products bundled together artificially. One of the product has got a higher rate of tax. So assuming for a minute, this is called a cool drink, which has got 28% rate of tax and a cess of 12%. Put together, 40% is the rate of tax. This entire package, Naveen is selling to Namita for a sum of rupees 1,000. On 1,000, 28% GST plus cess of 12% ideally should be levied. But because Namita is actually exporting out of India, Naveen has a choice not to charge the regular rate of tax of 40%. Rather, he will charge 0.05% CGST, 0.05% SGST. If both Namita and Naveen are in the state of Kerala. For a moment, if Namita is in the state of Maharashtra, Naveen will charge 0.1% on Namita for exporting that out of India. This is the concept where my rate of tax in case of a merchant exporter reduced from regular rate of tax to 0.1%. So this is a concept which is explained in your notification 40 of 2017. I think Akshay, for want of time, I'll take your question mark. I have your email ID. I'll respond back to your question. So let me finish a couple of the points which are earmarked for the day. Definitely, I'll come back to your question, Akshay. Naveen says capital goods for recipient or supplier. Naveen, the person who has got a license for EPCG, the person who has got a license for advanced license. For a moment, Naveen, if you have taken a license from DGFT, this EPCG is a license I get from DGFT. Naveen holds the this EPCG license. Say I, Praveen, as a supplier, when I supply goods to Naveen, it will be called as a deemed exports because Naveen is holding the EPCG license. I will charge GST. Either I can file a refund application or Naveen, you as a buyer can file a refund application. Coming back. Now, this concept of merchant exports, there is a procedure. What is that? Buyer has to intimate to the seller that I am a merchant exporter. Buyer has to intimate to the jurisdictional officer of Naveen saying that, sir, I am buying from Naveen, I in turn export. Namita, when she files a bill of entry, on the bill of entry, GST number of Naveen, invoice number of Naveen should also be there. And within a certain period, that is within a period of 90 days, these goods should be exported out of India. So this is a concept which is there in detail. I have explained in this slides with respect to merchant export. Now, export we have discussed. Now, with respect to exports, like your export of goods, there's one export of service which is explained by a circular. Let us look at this example. Students, we're at 8:59. I'll take another 3 to 5 minutes. Just wait. Please bear with me. Let's finish this discussion and then we'll go with a new topic now. In case of export of service, I have to receive money in foreign currency. So what if 100% service is not done by me? Some portion, say 80% is done by me, 20% is done by a third party. Let us take an example. Service provider is in India, the recipient is in US. And for rendering service, I need a support from another party who is in Germany. Service provider A is in India. Service recipient BCD is there in US. In between, a job work fellow or an intermediary who gives me a support is there in Germany. Now, there is an order received for 10 lakhs from a customer in US. Mr. A says to this Help Incorporated saying that, see, you need to render some portion of service. The value of that service is 2 lakhs. This Help INC renders the service on behalf of A to BCD INC. Now, in this particular tri-party transaction, possibility is there. BCD INC remits entire 10 lakhs to Mr. A's account, or BCD INC remits 8 lakhs into A's account, remits 2 lakhs into Help INC account. Now, this could be a tri-party transaction. In this transaction, this department says that, look, when A receives a sum of rupees 10 lakhs, A can declare that 10 lakhs as export of service. In turn, A has to pay on RCM, reverse charge mechanism, this 2 lakhs which is imported by him on behalf of BCD, a tax on reverse charge. I repeat, on this sum of rupees 2 lakhs, Mr. A has to pay tax on RCM. This is first choice. Second choice. Now, at the permission of RBI, let BCD make the payment of 8 lakhs to Mr. A and make the payment of 2 lakhs to this gentleman called Help Inc. When this is at the permission of RBI, Mr. A can declare rupees 10 lakhs in his return as export of service. He will pay RCM on 2 lakh service. He will claim input tax of 2 lakhs. Now, this declaration of 10 lakhs is permitted when A receives only 8 lakhs, which is by the permission of RBI. Now, this is with respect to tripartite arrangement. Now, basic conditions with respect to LUT or bond, please keep in mind. LUT or bond is a procedural aspect. I log into GST portal. I fill the basic information. What is the location where I have registered? What is the purpose I am doing, filling this particular thing for LUT or bond? I also undertake that, look, I am giving an undertaking to you that I export the goods or I export the services and I get the money back in convertible foreign currency. If I fail to export, if I fail to receive money, whatever tax is there, along with the tax interest, I'll pay back to you. This is an undertaking which is given using a LUT or bond. Now, this is just a procedural thing with respect to LUT or bond. And with respect to Nepal or Bhutan, as of today, any goods which are exported to Nepal, any services which are rendered to Bhutan, money which is received by way of INR is deemed to be received in foreign currency only with respect to supplies made to Nepal or Bhutan. And with respect to goods, students, just keep in mind. Now, with respect to goods, 3 months is the time limit. From the date of invoice, I have to make actual export of goods. I repeat, when an invoice is prepared, from that date, within 3 months, goods should be exported. So what if I cannot export? Take a permission from commissioner. Based on the commissioner approval, you can export beyond 3 months. So what if services? In case of services, within a period of 1 year, I have to receive money in convertible foreign currency. If I don't receive money in convertible foreign currency, I have to make the payment of tax along with its interest by virtue of this LUT or bond. Now, with respect to Nepal and Bhutan, I've said that it is deemed to be an export of services. With this, we come to the end of today's discussion. We are at 9:04. Couple of questions are there for me. Want of time, I'll just skip those questions. Next session, I'll take up all your questions, and Akshay, I'll revert back to your question. Till then, all of you, see you. Good night and take care.